Okay, let's unpack this. We've got quite the stack of sources here on Asian Paints Limited. Their latest financials, Q1 for fiscal year 26, ending June 30th, 2025.
Right.
We have the board meeting outcome, the actual statements, auditor reports from Deloitte, the press release.
Even the investor call transcript, it's all here.
Exactly. So our mission today is, cut through all this data, pull out the key signals, and really help you understand what these numbers mean. I mean, this is a company that touches so many homes, so many industries.
Absolutely. And what's fascinating here is you're looking at a real leader in paints and decor. And these Q1 results, they announced them July 29th of 2025.
Yeah.
They really paint a picture, no pun intended,
No.
a picture of market dynamics, consumer behavior, and how a major company like this responds strategically. We need to connect these figures to the wider economy.
Okay, so let's start high level, the big picture. How did Asian Paints actually do overall in Q1? Any immediate surprises jumping out from the consolidated or standalone numbers?
Well, flat is probably the headline word. Consolidated net sales were down just slightly, 0.2%. Came in at about 8,924 crores versus 8,943 crores last year.
Okay, tiny dip and profit.
That saw a bigger hit. Consolidated net profit after minority interest was down 6.0%, so just under 1,100 crores compared to 1,100 crores compared to 1,170 crores in Q1 FY25.
Right, and their PBDIT margin, that's profit before depreciation, interest, tax, and other income.
Also dipped slightly, 18.2% this quarter, down from 18.9% last year.
So what's driving that? Is it just the economy slowing down, or is something specific happening with Asian Paints?
That's the key question. And the press release gives us a couple of big clues. It mentions the flat sales were driven by, quote, higher rebating and a shift in product mix.
Okay, higher rebating. That sounds like discounts. More aggressive pricing.
Essentially, yes. It suggests maybe tougher competition or they needed to push harder to get sales moving. And the product mix shift, that likely means people are maybe buying less of the super premium stuff and more of the, mid-range or economy paints.
Which would hit the margins.
Precisely. And the standalone numbers, just looking at the core India business mostly, they mirrored this. Net sales down 1.2%, net profit down 7.5%. For a company like Asian Paints, known for strong margins, even that small dip from 18.9 to 18.2%, it's noticeable.
Okay, so overall numbers show some pressure. Let's dig into the segments. Asian Paints isn't just decorative paint anymore, right? How did the different parts of the business hold up?
Yeah, and this is where you see a real split. The main decorative business in India, it actually grew in volume by 3.9%.
Oh, okay, that sounds positive.
It does, but revenue declined by 1.2%.
Ah, so they sold more paint but made less money doing it. Back to those discounts and product mix issues.
Exactly. Management pointed to a, quote, subdued demand environment, blaming macroeconomic uncertainty and the early monsoons affecting painting season.
But some parts did well. You mentioned a split.
Right. The industrial coatings business was actually a bright spot. Revenue there grew 8.8%.
What's driving that?
It seems like the auto and protective coatings segments were particularly strong. It suggests that maybe industrial activity, perhaps infrastructure or manufacturing, is holding up better than consumer spending on home renovations right now.
Okay, interesting. And what about overseas? Their international business.
That was another strong performer, value growth of 8.4% in rupee terms. But in constant currency, it was up a really impressive 17.5%.
Wow, that's quite a jump. Where was that coming from?
Mostly Asian markets, the UAE and Egypt were key drivers. They did mention Ethiopia had some challenges with currency devaluation, but overall, international was strong, and profitability improved there too.
Wow.
They cited operational efficiencies and, interestingly, more favorable raw material costs in those specific international markets. So it's a good example of how their geographic diversification can help balance out domestic sluggishness.
Okay, so core India decorative paint facing headwinds, industrial and international providing some cushion. But what about their big diversification push into home decor? Things like kitchens, bath fittings, lighting. Is that helping?
Well, that's where the picture gets a bit more complicated. And frankly, less rosy this quarter. Most of those home decor categories actually saw degrowth.
Degrowth. Why?
The company again pointed to pressure on household disposable incomes. It seems when consumers get cautious, these bigger ticket home improvement items are among the first things they postpone.
Okay, let's break that down. Bath fittings.
Sales down 5.1%, landing at about 88.7 crores. and it resulted in a small PBDIT loss of 1.3 crores.
Not great. Kitchens.
Similar story, sales down 2.3% to 98.1 crores. But the PBDIT loss was bigger here, 6.2 crores. And that's notable because they actually made a profit in this segment in the same quarter last year.
Ouch. So that's moving in the wrong direction. Investment mode or just tough times?
Probably a bit of both. These are still relatively new areas for them compared to paints, likely still needing investment, but the shift from profit to loss in kitchens definitely signals challenges. Increased competition, maybe, or higher costs in a tough market.
And then there's White Teak. That's their lighting brand.
Right.
How did that do?
That one saw a really sharp drop. Sales down almost 32%, 31.9 to be exact, landing at just 20.2 crores.
Whoa. 32%. What happened there? They mentioned BIS challenges. What's that?
BIS is the Bureau of Indian Standards. So these challenges likely mean new quality or safety regulations, maybe testing requirements that could have disrupted imports or sales. It's like hitting a regulatory hurdle, just as demand for discretionary luxury items was already softening. A double whammy, really.
Okay. But there was one positive spot in home decor, right? Weather Seal.
Yes, exactly. Their UPVC windows and doors business. That actually grew. Sales were up 32.2% to 15.2 crores.
Huh. Why would windows and doors do well when kitchens and baths didn't?
Good question. The company mentioned growth from new products and synergies with their Beautiful Homes network. It could be that specific types of home improvement, maybe those focused on energy efficiency or security, are still prioritized. Or perhaps Weather Seal has a stronger B2B component that's holding up. It's definitely an interesting outlier.
So, it's a tough market, clearly. But Asian Paints usually emphasizes innovation. Are we seeing that pay off this quarter? Or are they just trying to keep up?
Well, they're definitely leaning into innovation. They reported that new products contributed about 14% of overall revenues this quarter.
14%. That's actually pretty significant.
It is. It shows they're constantly refreshing their portfolio, which is vital when competition heats up.
So what kind of innovations are we talking about? Fancy new tech? Or more basic improvements? That Lotus effect technology sounds pretty high-tech for paint. Does that stuff actually sell?
Yeah, the names can be something else, but they seem to be innovating across the board. On the premium end, you have things like All Protect interior paint with that Lotus effect for stain resistance and a long warranty, and even Nilea Arc, a super luxury lime-based paint that they claim purifies air.
Air purifying paint.
Yeah.
Wow.
Yeah. But they're also pushing things like Royale Play imprints for textures and upgrading their more standard Ultra ranges, Ace, Apex, Tractor, promising things like 10% additional coverage. So it's a mix, trying to add value at different price points.
And how are they marketing these? Just putting them on shelves?
No, they're running campaigns like the Budget Cam Warranty Maindom for the economy range during the IPL cricket tournament, and another called Sochahoka for World Interior Day, integrating tech like their color visualizer apps. It's a multi-pronged approach.
And beyond products. Anything else on the strategic front? They mentioned regional packs.
Right. Adapting packaging for specific markets like Odisha, and continuing to expand distribution. They're now at over 170,000 retail touchpoints. That scale is a huge advantage.
170,000, that's massive.
It is. And what's also fascinating strategically is their focus on backward integration, controlling the supply chain.
Like making their own ingredients.
Exactly. Their VAE emulsion plant is progressing, expected to yield benefits from Q1 next fiscal year. And their white cement plant in Dubai is apparently near commissioning. This isn't just about saving costs, it gives them more control to create unique, differentiated products.
Makes sense. And they made some acquisition moves, too. More money into APPPL and buying the rest of White Teak.
Yes. The 100 crores into Asian Paints polymers, that's APPPL, reinforces that raw material strategy. And buying the remaining 40% of Obgenic Software, which is the company behind White Teak, for 188 crores. Well, that makes a White Teak a wholly owned subsidiary.
Even though White Teak's sales dropped significantly.
Right. It's just a long-term bet. Despite the current dip, perhaps due to those BIS issues and market conditions, they likely see strategic value in owning the whole thing, maybe integrating it better with their Beautiful Homes stores or overall home decor offering. It's a sign they're committed to that segment long-term.
Okay, let's zoom out again to the economic landscape. Raw materials, competition, demand. What's the outlook there?
So raw materials were actually a slight positive in Q1, about 1% deflation overall, which helped cushion margins a bit.
But I sense a but coming.
There's a big but. the new anti-dumping duty on titanium dioxide TiO2 coming from China.
Right, TiO2. That's the key white pigment, isn't it? How bad is this duty?
It's potentially significant. Management estimates it could increase their TiO2 consumption costs by 1.5 to 2.5%. That deflation they saw could get wiped out or even reversed in the coming quarters.
So that puts pressure back on margins or forces price increases.
Exactly. They basically mitigated the impact in Q1 because they had existing inventory. But going forward, it's a real cost headwind they'll have to manage.
So are they planning to raise prices? What did they say?
They were cautious. Said any pricing decisions would depend on how other raw material costs behave, whether deflation elsewhere can offset the TiO2 hike. They're watching it very closely. Raising prices when demand is soft is obviously tricky.
And competition, especially with new players making noise. We heard about that 10% extra grammage offer. Is that a serious threat?
Management acknowledged the competitive intensity is high. They view that specific offer, the extra grammage one, as more of a tactical discount aimed at contractors and dealers, rather than a direct pull for the end consumer.
Trying to win over the influencers.
Precisely. It underscores their need to keep focusing on brand strength, innovation, and consumer connection, not just competing solely on price or deals for intermediaries. Their relationships are being tested.
Okay, so costs are a concern, competition is fierce. What about demand? Are things looking up at all? Any green shoots?
They did say they're seeing some early signs of revival in urban markets. That's positive.
And rural.
They're hopeful. Good, consistent monsoons are expected to help rural demand. Plus, lower inflation generally and supportive government policies should provide some tailwind.
So, cautiously optimistic.
I'd say so. They did mention Q3 might have fewer selling days because of Diwali timing this year, but overall they don't expect demand conditions to get worse. Their near-term target is single-digit growth, while still aiming to maintain that 18-20% PBDIT margin through cost control and other initiatives like focusing on B2B projects.
Okay, so wrapping this up, what does this all mean for you, our listener? It seems Asian Paints Q1 showed a company really navigating a complex market. There's strategic innovation, clear resilience in some areas.
But also undeniable challenges, headwinds in the core decorative market, growing pains in home decor, and new cost pressures like that TiO2 duty.
Right, so it's a mixed bag.
It really is. Which leads to an interesting question, I think. In an era where even established industries like paint are changing fast with tech, with consumer expectations shifting, how crucial is Asian Paint's strategy? This dual focus on one hand, deep backward integration controlling their inputs.
The VMVAE and white cement plants.
Right. And on the other hand, these tailored regional strategies, the massive distribution network, the constant innovation, could this combination be the blueprint for sustainable growth, even when the economic climate gets unpredictable like this?
That's definitely something to think about. How deep roots and targeted growth work together. Something for you to mull over as you continue your own deep dives.